Good morning traders and welcome to today's live trading. Today is the 18th of January. As usual we are on the FTSE 100, so let me run you through my analysis for today. You can see we're currently sitting up just underneath this band that you can see around the 6870 level. I've got one below at 6845, I've got one drawn in below there around the 6800 level, and then one above where we currently sat around just above 6900. Sort of four bands within the range of 100 points there. And as far as immediate trade setups go, what I want to see first thing this morning is a move into this band. I really want to see it react in some way, give me a sell signal, and I would quite happily look to sell that down to this band. I don't trade post-open price action. But you can see we've had a couple of nice sell pin bars already, one at 10 past 7 and one at quarter past 7, but I just don't, it's not my style to take any signals that form before the open. As much as I think this market will probably come down when it opens, there's still that opening volatility, and I don't like to get caught just on the wrong side of that. I would rather sit that out, potentially miss a trade or two, a successful trade or two to avoid that volatility, and then just take a position when the volatility is normal, and I can read the market properly. That's just a decision that I make, and one that I find works well for me. So I'm not going to be rushing into a trade just because I've got a plan. Basically, what I'm trying to say is don't just then go looking for any kind of signal. Look for a signal that fits your plan as well, which is what I'm doing this morning. So yeah, we're about quarter of an hour till we open, and then once that happens, like I say, I'll be looking for a sell signal to try and get short down to this band here. Until then, I'll grab a drink and I will meet you back here after the open. Okay, so we've just gone 9 o'clock. As you can see, I didn't get the sell signal I was hoping for. Price opened on this green candle here. It came straight up, doji candle after that, and then if anything it's given us a pin to the upside of this band without really breaking it, and then just moved higher. So there's been nothing to do really. Price made it sort of halfway towards the next band, it's come back, another couple of doji candles near the top of this band, and again we're sort of hovering in the mid ground between the two bands that I highlighted this morning. So there's been very little to do so far in the first hour. However, the picture's changed a little bit now. If I show you the 4-hour chart, the hourly chart, we were sort of testing this 200 moving average, and we've comfortably broken through that now. So actually a return to this band would look pretty good for a potential buy up towards this next band. However, if it comes straight through this band again, then obviously the original sell that I wanted to take down to this band would be good as well. But as it stands, I mean, we're just sort of waiting around for price to do something really. It's moving a little bit sluggishly, and I don't really like that it's hovering in the mid-ground. Usually if you're watching a price move in a particular direction, for example this time upwards, I like to see it come into a level of sort of significance. On this occasion it's looking like, let me extend this line, it's sort of poked higher, but it's that sort of level where it has reacted before, which is good to see, because at least it's sort of in like not a nothing level. It'd be easier to see on a higher time frame, obviously. It's reacted a little bit and bounced. Now, it would have been better if the reaction would have brought us into the band and brought us down to say this level, where we've got confluences on the 5-minute chart as well as obviously the upper time frame support and resistance bands. But that hasn't happened so far, and actually now if it rolls over and comes down to that level, we've got a high with a lower high, sorry. So then that sort of gives you mixed signals. So you'd have to judge it based on how it reacts when it gets down here. So yeah, a little bit indecisive, nothing too clear setting up or on the horizon for this market for me at the moment. But as always, I'll keep watching, and as and when it does come into the bands that we've highlighted, I will see how we react. Okay, so what I'm going to do is put a sell signal beneath this candle. The low is 69.06 dead on, so I want to be in at 4.8. Sell signal there. So that order's in the market now, so if price starts coming down, we will get triggered into a sell position. Basically, it has just come up and produced a sell pin bar. The reason for taking it straight away like that, a couple of reasons. We are now quite extended from the hourly ATMA and the 4 hourly ATMA. In fact, we're a huge distance from both of those. And on the 5 minutes, we're even a reasonable distance from the 5-minute ATMA. All that added with, this is a decent support and resistance band that we've come into for the first time. We've got a sell signal, although it's looking a little bit more pinny than it did a second ago. 1.2 to 7. I think we're okay. So like I say, if it comes down, we'll get triggered into a sell position. The first sort of point of interest is going to be how it reacts with this 5-minute ATMA if it does come down. And then from there, obviously, we're looking for a further move down. The risk on the trade is 7. It's going to be just on, well, it's going to be about 10 points. So we're going to be looking for at least a move down to this previous sort of sticking point from before that we identified. So yes. But anyway, the trade has been triggered. I will bring the ticket across as always so you can see it, and we'll see how this one gets on. Right, so just a quick update on this trade. Obviously, we got into the trade here at 25 past 9, this candle here. We grinded lower. We tested the ATMA, the 8 exponential moving average. We did react to that. We bounced, and then we did finally break lower. And I was waiting for basically a test of this level to get out of the trade. Now, obviously, there's always going to be a risk that today's R2 was going to support price as price came back down towards it. It just wasn't something that I was willing to. Well, it's sort of a twofold thing. One, I don't really look at these levels as with such significance that I look to come out of a trade unless there's confluences for that level. You know, that level by itself is not enough for me to want to come out of that trade. And two, that level doesn't actually offer me sufficient risk to reward to the risk that I put on the table. As I said at the start of the trade, the risk was 10 points. To get down to here, we're only looking at a 12-point reward, so that's 1.2 to 1. If I were to come out here, it was about 0.7 to 1, which isn't good enough. So yes, there is an R2 level there, but I was never going to come out of the trade there for those two reasons. Had this level been lowered down, say at this swing, then yes, I would have done, because we would have had confluence and the level. We would have had the confluence on this 5-minute chart and the fact that it is an R2 level. So yeah, I would have come out there. But as it happens, we have bounced from there. And the other thing I wanted to touch on was the reason I took this signal so early on was because of the momentum of price today. You can see that we've moved up really well today, and taking a short position against this movement is, some would say, maybe a little bit daft, but they do work. They work quite a lot actually, and you just have to take it a little bit differently than you normally would say. So if this market was sort of less bullish than it is right now, then you could wait for that more confirming price action. For example, I wouldn't have taken this signal, but maybe, you know, the next pin bar that came along that's underneath this swing. That's another added step I could take to sort of minimize the risk that I'm taking. But in this situation, because prices has moved so far upwards and the bullish momentum is what it is, I want to get in early because I know that the retracement on this move might not be very much. So if it's not going to be very much, I need to get in as early as possible. Now, if I'm going to jump into a trade early, I want it to be at a very good level, which is why I took the trade where I did. Like I'd gone through, we were extended from all the exponential moving averages, and we'd come into a support and resistance band that hadn't been tested today. So all of those things added up to like a really nice trading opportunity for me. We did get the move down, as you've seen. However, it's looking like it hasn't come low enough to give me the profit that I was looking for, which is fine. They don't always work, as I've said many times before. Your trades don't always work, and actually looking back at the trade, we can see it came pretty close. It was a good trade, it was a good opportunity, and I'm glad I took it, and I'd take it again if it was, you know, tomorrow and this similar thing set up there. It's just on this occasion it didn't quite come low enough. That's not to say it's not going to re-roll over from here. It could do. One thing I was looking at was that it was sort of making lower lows there, but it has broken up past that, so that seems somewhat insignificant now. Let me just move this to the back so that I can edit that. So yeah, I mean, really we're looking up towards this level here where price is current into now. If it breaks past this, I would imagine that it's going to come stop me out. To be honest, like I say, it's still really bullish. We've made that higher high, higher low, higher high, higher low. If we go on to make a higher high now, obviously then we get stopped out of this trade. But yeah, I just wanted to run through that. It was a good setup, and if it gets stopped out, I definitely won't be upset about it. But we'll watch the conclusion to this and recap what we've done. So as we expected, the market has now moved higher and stopped us out. Like I was going through, the trade was a good one in the end. The trade was a good one. The opportunity was a good one. Not in the end, as it has stopped us out, unfortunately. But yeah, like I was going through earlier, I would definitely take that trade again. The setup was good. I actually like those sorts of trades. I like getting in early because you see a lot of, if you are going to have a move that way, you get like most of the reward for it, if that makes sense, because you're so early into the move. It's sort of a satisfying thing when it works well, but just sadly not today. One more thing I wanted to go through though before I finish the video was Guy commented last week on the previous live trading video and was asking about position size. He wanted to know how, in my opinion, is the best way to go about increasing your position size as your account grows, which is a great question. And something I did early on was, I remember I would just increase the value per trade. So if I was trading at say £5 a point to begin with, then after a period of winning trades, say, and my confidence had grown rather than my account, I think, looking back, then I just increased that to say £6. And then I remember thinking, wow, that stop looks all of a sudden a lot more riskier, you know, because the value of your stop is now 20% bigger than it was before. And that can really play with your head. I found that actually quite difficult, and I assume this is what Guy is alluding to, because it sort of takes away from your ability to implement your strategy, because you sort of, part of your brain is focusing on, wow, this is more risk than I'm used to. And so basically, as I've developed my skills within trading, the approach I take now is, I mean, on this count you see me trade at £2 a point every week, and the reason for that is, to clarify, it is literally just for the YouTube channel, because there are plenty of channels out there that sort of boast big profits in like 3 minutes. You know, wow, I've made £2,000 in 3 minutes or whatever. And that's great for them. If that's what they want to do, then fine. But I actually think that's really, really detrimental to new traders to see things like that, because it gives them a false reality of what trading is really, and their expectations are completely off from the get-go. You know, they start with this unrealistic goal in their head that they're going to be making a couple of £1,000s in 5 minutes within 6 months, and you're not. That is not going to be the case. So I never wanted to be anywhere near that. Hence why I made a conscious decision when I started doing the live trade videos to just trade at minimum stakes, which on with Oanda is £2. If it had let me trade it smaller, I would have traded smaller. You'll notice I never really mention the profit value of a trade. I just mention it in terms of points, and that is because I just want people to focus on the actual process of trading, and that sort of, I'm not too much off on the actual question, because that merges over into the risk as to what Guy was talking about. Instead of thinking in pounds per point, I started thinking in percentages. So I only ever risk sort of between, well, it's 1 or 2% basically on a trade. And what I tend to do is at the start of the week, I will check what the account value is. I will make a note of what 1% risk and what 2% risk is. And then when I come to a trade, if it's a 12-point stop, and it's say a 2% risk a trade, I'll take the 12 points, find out what position size I need to trade at in order to risk my 2% value over 12 points, and I enter that way. So actually, every time I enter a trade, the position value is different, or most of the time. Obviously, if the next trade's 12 points as well, then it's the same thing. But so I'm never used to typing in a particular value, if that makes sense, into my pound per point box. It changes nearly every time, and because of that, you don't really get used to seeing your profit and loss move in a particular way, which I did in the beginning. I remember trading at £5 a point way back when I started, and thinking, and you just got used to how your profit and loss moved up and down in like 50p increments or whatever it was. You know, if you're trading it, if you're seeing the 0.1s change, so that became a really habitual thing, because you get to see price moving that way. Because now my pound per point value is different every time, I'm not used to how it moves, and to be honest, I don't really watch the profit and loss, you know, like an eagle like I used to do. So that helps. But yeah, the point is I now think in percentages. So actually, over say the last 3 years, or however long it's been now, those two figures are always the same, 1 or 2%. It's always been that. So it helps me, like I say, avoid me having to think about, wow, actually this risk is more than it used to be, because it's always just 1 or 2%. I do know the monetary value behind that 1 or 2%. I find that out basically at the start of every week, and I use those values all week, sort of thing. So if I have, say, 2 losing trades Monday, Tuesday, I don't drop it down because I've lost, say, 2 to 4% in the previous 2 days. I'll just stick with it for the week and then sort of reset it at the start of next week, if that makes sense. But yeah, that's basically how I deal with it. I don't think thinking in pounds per point will ever do you any good. I can't see or think of a way where that will be beneficial to you. I would wholeheartedly recommend that you just start thinking of your risk in terms of percentages. Take the weekly approach that I do, if you like, or do it on a, if you take quite a few trades within a day, do it on a daily sort of thing. At the start of every day, just check what your account balance is, note down what value you need to be risking, and then before you enter a trade, quickly work out what pound per point value, dollar per point value, whatever currency you trade in, you need to enter, and do it that way. And I promise you, it will be much easier down the long run. It might take a little bit of adjusting to, because it's a bit strange to start thinking that way to begin with, but it will 100% free up that thinking space to focus in and hone in on your actual trading rather than the monetary side of it. So, Guy, I hope that answered the question. And if anybody else has any other questions that you want me to look at or give you my opinion on, by all means, just fire them in the comments below, and I will do that. But I think I'm going to wrap up there. Obviously, today was a losing trade. I think we lost 10 points in the end. But as I said earlier, not a bad setup and a decent opportunity. So, hey ho. Well, thank you very much for watching. Subscribe if you haven't done already. I try to do these every week. I now have fibre internet, as I mentioned yesterday, which is fantastic. There's no dropping out. Everything loads really quickly. Been a long time coming, so that's good. And yeah, I'll catch you next week.